While every financial media outlet on the planet was busy debating tariffs, GDP numbers, and whether Bitcoin is going to 50K or 150K, something happened inside the institutional layer of crypto that the retail crowd completely missed. XRP investment products just pulled in $148 million in net inflows year-to-date through mid-February 2026. In that same window, Bitcoin products shed over $1 billion. Ethereum lost $458 million. Let me repeat that. The two largest crypto assets by market cap are hemorrhaging institutional capital. And XRP, the asset retail has been calling dead for 3 years, is one of the only assets still pulling in fresh money. That is not a rounding error. That is not noise. That is a signal. And today I'm going to show you exactly what that signal means and why the window to be on the right side of it is narrowing faster than most people realize. Welcome back. I'm glad you're here. This channel exists for one reason: to cut through the noise and look at what the data is actually telling us, not what feels good, not what's trending on social media. If you're new, subscribe. If you're a regular, you know what we do. Let's get into it. Let's start with the hard truth that most people aren't being told. When retail investors see a flat or declining price, they draw one conclusion: nothing is happening. They look at the chart, they feel the boredom, and they assume the story is over. But here's what they're missing. Price is a lagging indicator. What moves price is capital, and capital moves before price does. Always has, always will. The question you should be asking is not, why isn't XRP moving? The question is, where is the capital moving to before the price reflects it? And the answer to that question is sitting right inside the CoinShares data that just came out. $148 million in net inflows into XRP investment products in under 2 months, while everything else bleeds. While 4 straight weeks of outflows have drained $3.74 billion from crypto funds overall, XRP is still attracting fresh institutional capital. That is what shadow accumulation looks like from the outside. You don't see it on the order book. You don't see it in the price, but it's there in the flow data if you know where to look. Now let's talk about why this is happening, because this is where it gets interesting. Institutional capital does not move on hope. It does not move on vibes or Twitter threads or YouTube videos. It moves on legal certainty, infrastructure readiness, and risk-adjusted positioning ahead of a known catalyst. And right now, every single one of those 3 conditions is quietly being met for XRP, and XRP specifically. The SEC Ripple case already established that XRP, as sold on secondary markets, is not a security. That is settled law. That is not a prediction. That legal clarity is already in the record.